And we are live. How's it going, everyone? Welcome to the Multichain DeFi Summit. And today we have a pretty special event because we have projects coming from all different corners of the Web3 ecosystem. As I mentioned, this event focuses on decentralized finance protocols, and we have projects here that are building on Binance Smart Chain, Solana, Cronos, Polygon, and Fantom. So that's what really makes this interesting. And while each project has slightly different products, we're bringing this roundtable discussion here to really get an input on what's going on in decentralized finance as a whole. And I know we're going to have some interesting discussions as each of these builders gets to share their own personal experience on their respective chains. So, kicking this off, I have the pleasure of speaking to Ben Chow, the co-founder from Jupiter Aggregator. And a little background on them is they launched on Solana 2.5 months ago, and they are pretty much the de facto aggregator on Solana with over 6 billion of liquidity that they are directing and allowing users to efficiently trade with. So, without further ado, how's it going, Ben?
Hey, Greg. Happy to be here. I'm doing well.
Yeah,
And
it's
so is
amazing to
Jupiter.
have you on. And I'm just going to go ahead and power through the rest of these introductions here, and then we'll be able to get into the discussion. So next
Sure.
up, we have BiShares, and DeFi Vlad, the co-founder, will be joining us. For those who are unaware, we've actually had some podcasts with Vlad in the past, and BiShares most notably is a decentralized ecosystem that allows users to gain exposure to multiple crypto assets through what they call DETFs or decentralized ETFs. So, without further ado, how's it going, Vlad?
Hey, Greg. Thanks for having me on today.
Yeah, definitely. So, our next guest is definitely no stranger here on BSC News. We have ApeSwap, and Chip from the core team is going to be joining us. And I think there's not much more that needs to be said about ApeSwap, except it's a flourishing multi-chain NFT and DEX ecosystem. So how's it going, Chip? Nice to have you on once again.
I'm doing wonderful, Greg. Thanks for asking. Happy to be here and ring in the new year with all you guys.
100%. And I'm looking forward to getting some insight. Awesome. And last but not least, we have BabySwap, and Baby A will be joining us there. And for those who are unaware, BabySwap is a metaverse ecosystem that really combines DeFi, GameFi, and NFTs to really make it fun and have a nice user experience for onboarding people who may not be so gung-ho to jump into crypto. How's it going, Baby A?
Hi, Greg. I'm good. Thanks for having me here.
Awesome. So now that we got through all of those introductions, we can get into the first question here. And as I touched on, we're not really going to get too far into the specifics of these projects. We'll definitely circle back at the end and see if there's any interesting features or anything like that. But just to start with the multi-chain landscape, being in DeFi and crypto early, what are your guys' thoughts with all of these side chains, layer one networks, layer two networks that are popping up? And we'll kind of just go in order here and start with you, Ben. I'm curious what your thoughts are on this multi-chain landscape that's kind of appeared.
Yeah, I mean, I think it's really interesting, actually. For me, I think the thing is that I feel like community and social is such a strong part of crypto. And a lot of these L2s and L1s and these chains sort of build out a community that sort of represents what that chain is trying to build. I think, like, so for example, Solana has really attracted a lot of gaming and retail DeFi investors, right? And has built a good home for them. And I think, every chain seems to have their own kind of brand of identity or flavor and a community that goes along with it. So, and I think this next wave of people building the interconnections, these cross-chain interconnections, are going to be really interesting. So,
yeah, 100%. And I think just touching on the community aspect, that's something I've noticed of just talking to projects on their chain, even though there's like this small sort of beef, you can call it, between chains. Each chain is so friendly in their own community. And even looking outside of that, like, we're all on here for a reason. And anyone can just feel free to chime in here. Like, what is everyone's thoughts on the handful of different networks. Why do you think it's important that this is a thing? Something that I like to attribute this to is just looking at all the different brands we have in tech. It's not like a one size fits all.
Yeah, I agree. I think that you just touched on the community side of it. It's very interesting. We BiShares is actually like now going on to its third network, and every time we work with a different group of developers on those chains where we partner with different projects, you totally feel a different vibe in both the community of each network and the developer aspect. Like not that any of them are bad, but they're just completely different in the vibe and the community, and the way everybody interacts is just different. And I think that also comes with like how you guys just said that each chain is kind of specializing in something different, like Solana being in game and retail and that sort of thing. Each chain just has that feel because the communities are just so vastly different.
100%. And yeah, and just to jump in there, I would just to outline what my thoughts on that is I definitely think Solana has that game feel 100%, and then almost sort of an institutional feel. I was reading Crypto Cobain. He put out just like a meta game Medium post, and just talking about how one of the big things on Solana is there was a lot of institutional backing on this chain. So I think that's something unique. And then jumping over to something like Binance Smart Chain, where it also has a bit of that GameFi feel and geared towards that. But then you also have a massive retail audience. Like you look at Binance Smart Chain, and it's always the top of the list for transactions and sort of in this regard. So I think that's interesting as well.
Yeah, to tie back into the original question, Greg, I would say that a multi-chain future is necessary, and it's also quite viable. A year and a half ago, 95% of all DeFi transactions were on Ethereum. And over the past year, that's spread out quite a bit. And when that spread happened, what Vlad was saying, like each ecosystem is unique. They have their own traits, they have their own trends, they have their own kind of culture and people. And so if we're all kind of trading on one single chain and we're doing all of our activity on one single chain, then you miss out on all these opportunities. You create high levels of centralization, and you're basically welcoming failure. So yeah, I'm a huge proponent of a multi-chain future. I think it's necessary, especially as kind of regulators become more adversarial. It helps. And as an industry, we if it's decentralized finance, right, it's a bit of a misnomer if we call it decentralized finance, but then we all trade on the same chain. So
that's right.
Yeah, I think that's very well put.
I will say though, I don't think that all networks will survive long term. I think we're growing into way too many networks, in my opinion. And I mean, a lot of them are thriving right now because Ethereum is so broken. But in the future, when Ethereum kind of figures itself out, I think we'll start seeing not all chains surviving in the long run. But that's how I feel. Although I think many will survive, but I think some of the smaller ones may not, if they don't have like a specific angle or an industry that they focus on, or like a niche that they cultivate.
Yeah, they would go into the graveyard of many abandoned chains if you go back to the 2016, 2017 era when everybody was spinning them up left and right. So yeah, they'll definitely. I mean, that's what bear markets do, right? They take the wheat from the chaff and so forth. So yeah, no, that'll definitely happen. But I think the ones that do carry momentum into the bear market and through it will be positioned really, really well.
Yeah, I think that was very well put. Do you want to kind of tag on there anything towards the end, what you think of everything there, Baby A? Maybe give us a summary there of what we can expect for the multi-chain landscape.
Yeah, sure. So cross-chain has always been on our roadmap, but we haven't had the action because we feel like Binance Smart Chain still has things left over for us to build and expand. So I totally agree with what Chip said. I would say different networks are necessary because they represent the actual DeFi, where it's decentralized enough with all the different features and advantages. Plus, with all the competitions in different networks, the market will select the best ones. It's also the survival of the fittest.
Yeah, I 100% agree there. And I think the big thing to look at is these chains and networks are needed at the moment. There's way too many users that we need to onboard on DeFi, and still a lot of congestion we're seeing overall. So the scaling game is always going to be a battle, right? There's this kind of overarching goal to get DeFi Web3 into 1 billion users. And we're going to need multiple chains to do this. And just looking at Ethereum, like the multi-chain landscape has allowed what we see now as Web3 and DeFi to really become what it is. If Ethereum was still the only solution, 90% of the projects we see today probably wouldn't exist. So I think that was a really fun question and just kind of clears it up. I mean, on crypto Twitter, you always see this like back and forth between chains. I personally have just started bridging like crazy between all the chains, and I have no mind. But whenever you take a step back and you actually talk to 80% of crypto natives, it's always a similar answer to this, that the multi-chain landscape is needed, it's necessary, and there's reasons for certain chains. So to get into that, reasons for certain chains, I'm curious, why are you guys building on your respective chains? What made you attracted to being a builder on this chain? And again, we'll start with you here, Ben, on Solana.
Sure. I mean, I feel like I'm just going to echo what probably a lot of people have said about Solana, which is the low gas fees and the high transaction speeds. But like I don't think. I mean, if you're coming from Ethereum, what's interesting is the experience that people have coming on is so visceral, right? And so game changing. And I think one of the things that people may overlook a little bit is that, and one of the things that we see, we've had, in recent months, just an explosion of volume on Solana. And I think it's because, the gas fees are so low, a lot of things, you can try a lot of things. You can experiment, failed transactions are not a big deal. People can build and compose and it's not like, if it doesn't quite work, it's okay, right? It's not a deal breaker. And I think that's one of the exciting things for, like, say, a retail investor that's doing sort of small size trades, for them to be able to really try out new DeFi protocols that they may not be familiar with, may not totally understand. It's much more approachable and accessible for them. So.
Yeah, 100%. And that's sort of like Solana's moat there, the scalability and all of that. And it's great. I remember onboarding some of my friends on who came from Ethereum and even Binance Smart Chain. And it's like, we're in there in the Fantom wallet. And I'm like, okay, I sent it. And it's like the words come out of my mouth and they're like, oh, I got my funds. So that's always super fun to just mess with and kind of have that aspects of scalability and cheap transactions. And that's something we also see on a lot of these other side chains. Jumping over to you, Vlad, here on what made you guys pick Binance Smart Chain, and then now more recently jumping over to Cronos. I think that's very interesting as well.
Yeah. So I think when we started coming up with the idea of BiShares, the other networks weren't really out released as they are now. They didn't have user bases. So it was kind of, we just could not release BiShares on Ethereum network. It would just destroy any usability of our product. Like some of our products, they have so many back-end transactions. Like one of our products, it has 400 transactions in the background. And if this was going to run on ETH, like the transaction cost would be probably $1,000 plus. There's no way any average user would be able to complete a transaction on it. So right away, Binance chain became the chain that would make sense so that we could do these transactions on and actually make our product work. So for us, that was a natural fit. And also we were attracted to the Binance chain because it still has the biggest user base and it has a very easy on-ramp. I mean, this has all changed since we've launched because Solana and everybody's kind of, figured this out as it's gone along. But at the time, even getting like an on-ramp to get retail funds into a network, at the time, the Binance chain was the easiest because users could go from Binance.com or Binance US, withdraw or whatever, and get onto the chain. So it was really kind of the only option for us at the time. And then, and it's one of the same reasons why we actually looked at expanding onto the Cronos network is the crypto.com, they have a very easy on-ramp and off-ramp for users, and coupled with the crypto.com card and all that sort of stuff, it just made it a very good solution for us to try to expand onto. We really wanted to play with that aspect of getting users to participate in DeFi and then take their rewards, and then have this easy off-ramp to actually make use of their rewards in the real world, right? I mean, it's all fun and games when we're all dealing with crypto and doing all of that, but actually have money in your hand at the end of the day, that's a pretty cool experience that kind of attracted us to going into the Cronos network.
Yeah, 100%. And that's actually something our other co-founder, Ben, is very fond of, sort of that intersection of CeFi and DeFi, having this massive liquidity on-ramp of being able to onboard users. And that's something where some users, depending on your thoughts of decentralization and where your compass there, may push back on that. But overall, it's been immense for onboarding users to these networks.
I think our last podcast with Ben, we at the end, we just laughed. It felt like we were just doing a big crypto.com commercial by the end of it.
Yeah, no, Ben is super bullish and gung ho on crypto.com.
So
and I think
yeah, go ahead.
Yeah. I think something that's just excited about crypto.com before we jump over to Chip is that they are specifically really targeting this US audience, which is not something we saw so much with Binance. I mean, Binance US was kind of slow to push Binance Smart Chain. I think they recently just enabled withdrawals, and they've just been having, I mean, not issues, but it looks like they're not pushing super hard for the US market. But then now you have crypto.com building this EVM competitor or EVM solution, and it's allowing US users to really get into it. Things like here in California, where I'm at, seeing the Staples Center renamed. So I think that's incredible for crypto.com, and a big case there, like just for all of us on Binance Smart Chain, even Solana, the same thing. You have that FTX on ramp, but more so for Binance Smart Chain, having that on ramp of the biggest liquidity network in crypto, onboarding users to DeFi has been massive for building here. And I know as we get into more here, like we probably just stole some of Chip's answers, but we'll let you jump in here. How many chains is ApeSwap on right now currently? I know Polygon for sure. Is it on?
Yeah, two chains.
Okay.
Yep.
So BSC and Polygon.
Yeah, it's in homage to the actual rapper 2 Chainz. So yeah, so the funny thing with CRO is I wanted to check out their DeFi ecosystem, and I go to their site, and then it says use this wallet, and I click through to the wallet, and I was geofenced. It told me that users in the United States cannot access this wallet. I closed the site and never looked at it again.
So look at me learning. Maybe they aren't going for the US audience.
I don't.
But
yeah,
that's
I don't
interesting.
know. I know operationally that it costs a lot of money to procure naming rights, to get actors, to do ads, and all these types of things. And so, where that money is coming from, and and what they're planning on doing in the future, it's they've got a lot. It's a very different approach, and it's very atypical than what you've seen with most crypto projects, and with the way that the US government is. Like, I wish them well, man. Because that's a hostile regulatory environment when they're calling you felons and terrorists in Congress, right? So, for going back to the question though, for us on BSC, and Ben, you had mentioned it, the whole C DeFi. Solana has this too via FTX, and that is bringing in all of the majors and the highly in-demand coins that aren't native to Binance Smart Chain, but we have access to it, right? And so that's huge, because users can come onto ApeSwap and they can trade Polkadot, or they can trade Atom, or they can trade Cardano, and it's not in a centralized environment, right? And so that was a huge appeal for us. And then obviously, throughput, speed, fees, those are always very, very attractive. When we launched, it was during the big exodus from Ethereum in February at the beginning of the year. And so that was, I guess we were kind of in that migration pack, right? We were just with the flock coming over. And so, yeah, I mean, long-term wise, BSC, with the support that Binance provides through pegging and wrapping tokens and capital investment into the ecosystem, like, it's super, super bullish. Binance is has been the top centralized exchange for quite a while. And I don't think that they're going to lose that spot. So that liquidity that they have access to and that they bring into our ecosystem is super, super beneficial. And then on top of it, we have the most users of any platform in the world. So yeah, BSC is great. Polygon was, it doesn't have the same amount of users. It doesn't have the same, we don't attract liquidity the same way. We're not giving banana out over there, but it's still a decentralized exchange and it still does quite well and people trade there quite often. And so we learned a lot when we moved into Polygon because they're just entirely different structures and each work. Each are used. And so it's really interesting from our perspective to see that difference. And so that's why we're being quite methodical in plotting on any potential third chain, because we learned a lot. We've learned a lot on almost a year in BSC. We've learned a lot from our experience at Polygon for 5-6 months. So whenever that third option is presented, we want to make sure that it's right and we execute it properly. So yeah, that would be the answer to the question.
Yeah, no, there's a ton of insight there. And the big thing is that liquidity on ramp was massive for users. And for us who are here in February on BSC, that was insane growth that we got. And that was really when BSC got all of these users and there wasn't all this buzz around Solana, Avalanche, Cronos, and it was kind of everyone exodusing and being like, whoa, I want to try out Binance Smart Chain. I know personally for myself, I was getting involved in Ethereum DeFi right at the top of DeFi summer is really when I got in. And I just remember paying 10-20% of my portfolio in fees and then jumping in a yield farm and the token just nuking 80%. And I was like, this seems like fun concepts. And I saw the Binance Smart Chain and I kind of was like, I can't afford to keep these fees, but I think this is somewhat innovative, and just jumped over. And that was sort of what brought me over to build here. And it just made sense. That's what it comes down to. I'm curious what you have to throw in here, Baby A, and we'll actually switch this up here next so you're not at the bottom of all these discussions. I'll actually have a question for you guys first after you address this one.
Yeah, sure, sweet. Yeah, of course, you all mentioned about it. BSC is super cheap and fast, but I must admit that since BSC is trending right now, the chain is sometimes congested, especially when our game first got online or any trending new games have new features releasing. The chain would be super congested, and the users start to complain about it and blame us. They say your game is not good enough, but it's actually the chain is congested. But we're kind of proud of it because we make the chain congested. But I don't think it's a problem, and it can be solved by improvement. And another important thing is we focus on newborn and long tail projects. We decided to launch our project in BSC because it has rich soil. What I mean by that is it has the most newborn and long tail projects because it's cheaper than Ethereum, and it has the largest traffic volume other than Ethereum in the first place. It's more fitting for new projects to grow. It's also backed up by a centralized exchange, Binance. So we figured it has the most possibility.
Yeah, awesome. And kind of just to jump to the next question, because I think we all everyone here has similar reasons for building, whether it's you guys building projects or even us building out media outlets. But I'm curious, Baby A, and you touched on this a little bit in the beginning, and I'll just throw my 2 cents in from expanding to multi-chain. So first, the question is for projects that are currently on one chain, and then I'll flip this around for all of you guys who are on multiple chains. But for projects who are on one chain, what is stopping you from expanding to more chains? And just to jump in here early on, it's a lot of work in the sense that just DeFi moves really fast. And I'll leave it there and I'll add in my perspective at the end here because this question isn't particular for me. But why are you guys still focused on BSC, Baby A?
Yeah, we just feel like the appropriate time hasn't come yet. First of all, we didn't stop the traffic volume from other chains into BabySwap because we chose to collaborate with several cross-chain aggregators that allows people from other chains to buy Baby. We also welcome projects who cross to BSC from other chains. Actually, we open a lot of farms for these projects and also open farms for Fantom, Avalanche, and other outstanding assets with large volumes in BEP20 version. So basically, we welcome people and assets from other chains. But as I said before, we felt like BSC still had things left over for us to build and expand. We haven't finished building the metaverse on BSC yet, and we wish to do the cross-chain after this metaverse has been built. And the cross-chain is only like another planet or another mystery universe for users to explore. The basics are the same, but you go to another planet to see all different kinds of assets. That's what we feel about cross-chain, and we gotta build the main verse first.
Yeah, and I 100% agree. Here at DeFi Direct BSC News, the first expansion we did was to Solana, and it was incredibly gung-ho, and we jumped into it, and I started heading that, and then it just turned into this thing like, oh wow, now I have to keep up with double the news. And then so we pumped the brakes on the Solana a little bit, made sure we had BSC 100% where we want it, jumped back on Solana, and then I got excited again, and I'm like, oh, but now we have Avalanche and Polygon and all of these. So then we come and we're like, okay, let's do Fantom, Avalanche, and ETH. And then same thing. Now it's like, oh, cool. Now there's 5 times the news to keep up with. And now we're pumping the brakes again a little bit. Even forgot to throw Cronos in there, but it's just hard to manage all of this considering the speed of the ecosystem. So I think there is definitely merit to focusing on one chain. You just have to be pretty confident that it's going to keep market share. To jump in and open this up for everyone, or I'm totally skipping you here, Ben, as well. What is stopping you from expanding? And I think something has to do here with how fundamentally Solana is built. You want to jump in, and I'm curious, what would it take to get Jupiter multi-chain, considering it's in Rust and a lot of these are in Solidity?
Yeah, I think to start, like, let me address like why we're focused on Solana first, you know, and
Perfect.
and I think it speaks to sort of our mindset as builders, and one thing that's really important for us is like where are we adding value to the ecosystem, and you know, what does the ecosystem need, you know? And one of the reasons why we started Jupiter, I mean, there were many reasons, but you know, at the time, I mean, we were actually the first aggregator, so there was no aggregator. And what we saw with Solana was that there was an explosion of new tokens and new dexes coming online constantly, right? And not only that, you had like this ecosystem that was predominantly, you know, people coming in for games, GameFi, NFT, you know, like a typical DEX UI experience is a little bit overwhelming, right? They're more comfortable with sort of just a simple swap. And so I think, you know, we saw how problematic it was going to be for people to like, you know, hop around different exchanges and compare prices, and you know, and we realized like, look, you know, we could add a lot of value right now, right? If we could easily aggregate all of the liquidity and give people a very simple experience for swapping, and not only that, like, you know, do all the hard work to find, you know, the best price routes between any token pairs on Solana. And I think it's paid off. You know, I mean, it's turned out like there was a good market timing in terms of this need, and you know what users and traders wanted in Solana. And so I think for us, our job is to really is to make, you know, Solana a hub, and you know, be the place for anyone to swap for, you know, on Solana. And then in terms of like our plans for, you know, cross chain, I think we're super interested in that, and I think the like our next steps, we're actually talking to a number of the bridges in terms of, you know, collaborating and working with them on how to best you know, go cross chain. So
Yeah, and I'm curious there, do you have any sort of insight? This is always something like I've heard it's difficult. Do you have any like insight of what's being done or how hard it really is to get Solana interoperable with EVM? I know they're potentially even working on that at the Solana Foundation, if I'm not mistaken. I don't know how high up that is, but do you have any insight on that?
Well, there is a project right now called Neon, project that is, you know, is working on sort of a EVM sort of virtual machine on top of Solana. I think it's going to be one of the projects to watch, you know, in terms of compatibility. I think, I mean, there's a number of problems to tackle in this area in terms of interoperability and you know, cross-chain. I think the first challenge is just being able to make it super easy to move assets, you know, back and forth. And I think it's getting better, but there's so many challenges, right? And you know, I think one of them is just, frankly, the user experience is just bad. You really have to be incentivized to want to move your assets across chain. And I think, you know, I can't wait for a world where like it's as easy, you know, swapping cross chain as it is like within a chain. So
Yeah, definitely agree there. And hopefully Andre over at Allbridge is working on that. I know that's one of his goals over there, to make it as seamless as just the DEX swap to get multi-chain. So now to jump over here, for those that are multi-chain, how much extra is it deploying on another EVM? Is the code exactly the same? Is it fairly similar? I'm not a developer myself. And then have you guys felt like you almost are spreading yourselves thin? It almost sounds like ApeSwap has a different model on Polygon, but I don't know who wants to jump in first. Let's start with you here, Chip. We're just gonna break up this order.
Go in reverse order, right?
Yeah.
Yeah. So, you know, I'm not a dev, so I can't speak to the specifics of the actual code. I would defer to Vlad for that. But I do know that Ape Guru, one of our co-founders and developer, you know, he says, you know, forking is the easy part. So getting the code ready to deploy on a second chain, that's actually the simple part. The hard part comes after you deploy it, right? So you have to maintain it. You have to make sure it's secure. You have to promote it. You have to attract users to it. And so when you're talking about going cross-chain, it's like, all right, we're on BSC. We have our castle, right? And before we moved to Polygon, there was like 15-ish to 20-ish apes on the core team, and then an equivalent amount of admins. So we have this one big castle, and now we're building a second, right? So it's not like you build that second castle and then just let it be, right? Like you still need everybody inside the castle doing all of their work to make sure that the castle's operating properly. So you need double the admins, you need double the developers, you need double the business development team, you need double the community managers. And it's hard. It's really, really hard. And I think, you know, in the summer, particularly when we saw a huge rush and kind of an exodus off BSC by projects onto other chains, they fell flat and a lot of the projects died because they bit off way more than they could chew. I mean, we've got, you know, over 30 people on our core team now, and we're managing, you know, trading on 2 different chains, and it's still a challenge for us. And we're 30 people on our team, and then another 50 plus some admins in our community channels. So, I mean, it's really, really hard. And I think that anybody who undertakes it, they need to really account for this, right? It's not, oh, hey guys, we're spinning up, we're going to Fantom, right? No, it's like actual, it's like you need a whole other team to do this. So please keep that in mind. Otherwise, like, what's the point? Right? Because if you go and you do it like sort of half-assed and you don't do it the way that it should be done, it's just going to flop and fail. So it's just a waste of literally everyone's time.
Yeah, 100%. And that just circles back to me being like, oh shit, 5x the news as the space continues growing. So I think that hammers home. And then we'll jump over to you, Vlad. So it sounds like the forking part is easy, and that's kind of what I understood. But what is your perspective from jumping over to Cronos recently?
Yeah, I'll echo what Chip said. It's just a mountain of more work. The actual code is not that hard to copy over. I mean, if you already prepared your product, it's a lot of copy paste, and then make sure you're testing in the new environment. But everything else that goes behind it's hard. Like you need, like you said, all the admins, you need all the biz dev, you need the community, the marketing, and all of that. So it is a challenge in that regards. And I think also for many projects and the developers that may be listening here, one of the other challenges is moving your liquidity over, right? Like most projects don't have infinite amount of money to actually just create new pairs on all these different networks. It's just like adding yourself to another DEX, right? You need to bring your token over, which is getting fairly easy with all the bridges that are available now. But you also have to see the liquidity. And then when you start spreading your liquidity around and it gets thinner and thinner, it causes bigger fluctuations in your token price and all these other things that most people don't think about. So it is a challenge to actually, to move your product over is simple, but to actually, like Chip said, to maintain it, to make sure that it's all functioning and make sure that your project can survive and go forward, that's the hard part of it. So it is something that you do have to plan out. It is something you have to consider before you jump to more and more chains. I mean, it'd be super easy we could spin up BiShares on every single chain. It's not a problem in the code side. It is a problem to make sure that you're liquid enough, make sure you have support from partners, because that's another thing, right? You got to go and seek new partners, new dexes, like all the stuff that you just don't think about in the original concept when everybody says, when are you going cross chain? When are you going cross chain? Just like you've been asking, Ben here and Baby A, when are you guys going cross chain? It's not that easy. You have to actually go out and plan the sequence of events that's going to happen for you to actually go there and then thrive. So yeah, it is a challenge for sure.
Yeah, that makes a ton of sense. And I can echo that as well. And you perfectly transitioned into one of my other questions. Almost every project here values liquidity immensely. I'd say Ben gets the best part. He gets to aggregate it, but I'm sure he has very interesting insight on liquidity, getting to see it more from the top. But just jumping back here, and we'll revert back to the normal order just so things aren't confusing, but we'll skip you, Ben. So maybe it is a little bit confusing. What is it like? How do you guys aim to attract liquidity, and how do you plan to keep the liquidity once incentives taper? I think something I've learned in the past sort of 6 months, 7 months in DeFi is liquidity is not sticky at all. It's extremely jumpy, and it's just going to jump to the next highest yield. How do you guys keep ample liquidity? Currently, it's probably yield incentives, but like, what is the longer term route for this? So we'll start with you, Chip. I think you had some interest. I don't even know. I'm confusing my order now. I think it's Vlad. Sorry.
Yeah,
We'll go
hey,
Vlad.
no,
Or whoever.
I'm happy to take the torch because this ties into our dynamics of BSC DEX versus Polygon DEX, right? And so we attract liquidity on BSC with the banana token, which is a pretty tried and true model, right? And so that works, but like you said, it's not sticky. And for us to maintain decentralized exchange, we want to make sure liquidity is available for people to trade. And so it's a process. And we actually have a DEX engineer dedicated to this process full time, monitoring the analytics, monitoring trends, adjusting farm rewards, soliciting partners for top ups, and all these different types of things. And so it's attracting liquidity is really hard because the easiest way and the best way to do it is to incentivize it, right? But when those incentives end, what happens? And so what our approach is at ApeSwap is to make sure that there's something other for them to do when they're on our DEX, right? So yeah, you could come in and trade and you could provide liquidity, but we try to sustain liquidity through our ecosystem. And so that's, providing opportunities beyond farming. So our non-fungible apes, our initial coin offerings / initial ape offerings, GNANA governance, partners, and the different promos that we do. We try to take the mindset solely off of profit motive and really get buy-in from our users into our ecosystem, because we spent a year building it, 7 days a week, sun up to sundown. The market never sleeps. And so we put a lot of love and effort into the ecosystem and providing other opportunities for people beyond just yield farming, right? And so that's our approach. But I think what the point you were talking to, where the liquidity isn't sticky, this is where the protocol owned liquidity movement is coming big into play into this. You see it with like the Olympus. And so this is something that we've had discussions internally with ApeSwap, right? Is this something that we could use to make sure that our DEX is always available and always operating and has sufficient liquidity? And so, yeah, it's really interesting. It's a really interesting dynamic because, in the realm of decentralized exchange, there isn't a single entity providing liquidity, but within this protocol owned liquidity dynamic, that changes quite a bit.
Yeah.
And so philosophically, like, is it still decentralized exchange, right? So so yeah, there's a lot to it. And this is one of the hardest parts about running a swap or a DEX, is how do you attract it? How do you maintain it? And we feel like we do pretty good with it. Outside of token price swings and so forth, our liquidity is pretty good. And we have a lot of tokens that have very, very strong liquidity on our DEX. And so, the book isn't written on this. And we're all writing it now. We're all trying and testing different things, and so maybe this time next year we'll have better insights, right? Like, is protocol owned liquidity viable, right? Is it sustainable? Does the market even trade with it, right? Because you're essentially just swapping out a centralized entity for a decentralized exchange team. So yeah, it'll be really interesting to see how this goes, and what the market really values, because in this discussion on cross chain, there's other chains that have decentralized exchange. They don't provide yield incentives. They just redistribute trading fees, like the old Uniswap days, and it works really well for them. It works really, really well. So maybe we don't have to incentivize liquidity with Banana, and maybe there's other options. So, at the end of the day, our primary goal and our primary thesis is decentralized exchange. And that's what we want to have continuity on. And that's what we kind of hold as our highest priority.
Definitely. No, and I think that's very suiting. And just looking at the other models, right? Those are things I didn't even mention, but now you're saying it makes a ton of sense. Like, look at Uniswap. They just have this moat of liquidity. And part of it is probably just because they can trust their smart contracts. And that's a really big thing. Other things like protocol owned liquidity is on the rise as well. So this sort of looks to solve that issue of having mercenary liquidity where it gets up and jumps. I think it's only fitting now we jump over to Baby A, who is building also another DEX ecosystem. How are you guys looking to keep liquidity in the ecosystem?
Yeah, first of all, you guys got me scared about cross-chain. Just to add on that, we do have the same feeling because we only have 20 people and taking care of one decentralized exchange and 3 games. 1 is online, 2 is in progress. So I can't sleep. So back to the question, when we first got online, ApeSwap performed so well, and every time we check on the data, we'd all say, "Damn, look at Ape." But then we find our own way, so things get a lot better. We have 3 things to actually attract liquidity. First, the farms, the traditional way. We will offer farms for the qualified projects, even though they might be new, as long as they have great community volume or anything else, we are pretty open for it. We then have trade mining. Trade mining is an incentive for users to trade on BabySwap. The more they trade, the more trading fees occur and the more LP holders can share. So it's just a little tricks. So that's why users are willing to form their LP on BabySwap. And last but not the least, we have Bottle, special for newborn and long-tail projects to prove themselves. As long as they win the weekly top 3 in Bottle, 3 projects can share 50,000 or 10,000, depending on the trading fees we have for that week. During the bottle, their liquidity and trading volume on BabySwap, they both count. So users can use their baby to vote for the projects. In this way, projects can get market exposure and funds and also liquidity on BabySwap at the same time. So the whole point here is we don't mind sharing. If a project is willing to put all liquidity on BabySwap, we don't mind sharing all the trading fees as well. Babies helps babies, so we can grow together.
No, that's amazing to hear. And it's just unique, like listening to all the different mechanisms, because what Chip is saying, like this concept of having liquidity that's brought by the users is definitely really new. And we're also seeing things like even market makers are starting to come into the decentralized space and providing buckets of liquidity, which also kind of touches back on to like where your compass is with decentralization. But to keep moving forward here, to jump over to BiShares, this is not so much a decentralized exchange, but having the liquidity is necessary. How is anyone going to buy these DETFs if to get into it, your slippage is 5-10%? And then I imagine within those DETFs, the baskets of assets have to have decent liquidity as well. And I know this is something that even just having liquidity for the DETFs is something that you guys are working with ApeSwap with. What is your thoughts on this? And I think you guys also incentivize this liquidity, correct, Vlad?
Yeah, so yeah, we definitely do incentivize some of our products, because I mean, I think everybody's touched on it. If you incentivize users, you get liquidity, but it's also like everybody shared, it's not something that you can do forever. And you know, the more you give away token, the more it's like a double-edged sword, right? Like if you give huge APYs, then people are earning this token. It's like free money, and then they just start dumping it, and then it hurts your supporters. So you kind of really have to balance of what it is that you're willing to give away for that liquidity. So since we're not a DEX, we don't need to attract liquidity in like you said, in it like ApeSwap or BabySwap. We don't need to have our users deposit that liquidity, but we are also a liquidity platform because you're minting our index funds or DETFs. So the way we try to do it is, when we're creating our products, and we work a lot with ApeSwap as our main DEX for creating these, is we always have to look at how liquid is it, so that we don't have these issues where if somebody's going in to mint with a larger sum of money, is it going to start skewing the price of these tokens? So that's one of the considerations we definitely take when we're like planning out what basket of tokens is going to go into an index, is exactly, you know, how liquid is it, how much volume there is, and all those sort of factors. But in terms of attracting liquidity, I think we're just trying to innovate and create new products that maybe are exciting for users to try and experiment with, rather than just doing the same thing over and over again. So like if you followed our history, we've changed the way we operate, and the products that we push out on a regular basis is where we just started with like regular tokens and just being a basket of tokens. And then we said, no, users actually want to earn yield on that. So we started coming up with creative ways that don't necessarily require us to give away our token, but actually allow using other platforms that create extra incentives to try to incorporate that into our products. And that's kind of the way we've been looking at it going forward, is how can we bring users to earn yield, which will attract that liquidity without actually having to give up as much of our own token, or giving up as little of our token as possible, which makes it more scarce in the marketplace, which hopefully makes it more attractive to the community as a whole. So that's kind of been our way of looking at it, is making sure that everything is liquid in the projects that we want to support. And that just means that we try to partner out with good projects and include good projects, making sure that they're liquid and they're popular, and then making sure that we're not just giving high APYs on our own token, which is a double-edged sword, like I talked about.
Yeah. And I think that's really interesting. Now I want to jump over to Ben here, because I feel like he's just sitting back smiling there because he doesn't need to incentivize any liquidity. I'm curious, what are your general thoughts on incentivized liquidity? And then what are just your perspectives as an aggregator? This is something where you don't have to battle this inflation that a lot of projects do to onboard users, because you don't need to. I mean, there's ways you can attract users, but at the end of the day, it's just a more efficient swap. So I'm curious just for you to jump in and maybe give your 2 cents overall.
Yeah, I actually have a lot of interesting thoughts to share on this topic. So one thing is that Jupiter, we're actually a great partner to all the DEXs that are on Solana, and the reason why is that we actually drive a lot of volume to DEXs, and and with that volume comes sustainable fees, right? That LP providers can earn. And the reason why is that because we're aggregating and we actually support 2-hop routes, right? A lot of the times, the volume that we're driving to DEXs isn't because there's demand for a certain token, but actually there's a price inefficiency in that market that allows for that token, that pool, that market to be sort of a facilitator for the best price route. right? So what the interesting thing about that is actually we see a lot of the best price routes come from less liquid markets, right? Especially for a lot of sort of small trades, which kind of happen on Solana with the many retail investors, right? So what's interesting there is that a lot of the best price routes and a lot of the opportunities to get the best trades come from this long tail of markets, like small markets, meme tokens, all sorts of things that are going on. And so not only, I think it's a win-win for, you know, for both users who are looking to swap because they get more tokens as we find these routes, and for LP providers because they get volume that they wouldn't normally have to, you know, they wouldn't normally get because, you know, people, they don't have to attract demand for their own token. And then the LPs for those markets earn more fees and more sustainable fees, and they don't have to rely so much on liquidity money. So I think that's pretty awesome.
Yeah.
I guess one other observation. So I'm a big fan of Orca. That's also on Solana. I think they, just to share something that I really like what they do, and they do something called they have these aqua farms, which is sort of like farming incentives. But one of the interesting things that I've always I thought they did really well was, and I don't know if anyone else is doing it, but they actually do weekly rotations of their aqua farms. And the nice thing about that is that they're building, it kind of gets people to move their liquidity and hop around the different farms, which also generates a trade volume and then fees. And it builds a nice little virtuous cycle for the kind of ecosystem that they're building.
Yeah, that's definitely unique. And I have seen that. And it's cool seeing all of these different models and like what will end up working in the end, because at the end of the day, like there's two really big facts. Like liquidity is needed for trading. Like you're never going to get around that. And then the second thing is liquidity is always going to chase the highest yield. So figuring out how to, one, get the liquidity you need while rewarding more of these users who are going to be long-term liquidity providers versus mercenaries. That's sort of the main goal there. So I was just curious of hearing everyone's thoughts and sort of input. We are getting towards the end of my questions here. So to wind this down, we'll just go from the top, and now we'll have some time. Like, what is your favorite aspects of the project? Maybe just a little boilerplate, and then more so like what are some exciting features you have coming up? So we can start from the top with Ben. People can feel free to drop questions while we're going through this, and if I see any good ones, I'll pick them out and ask them to the respective person near the end. But what is there to know about Jupiter and what's coming up, Ben?
Sure. So most recently, we've just launched our SDK. So anyone can now have the Jupiter, the full functionality of Jupiter and the swap aggregation. You can build that into your dApp, UI, and protocol. Right now that's an NPM library, but very soon we'll be announcing an API for it. So whether you're a mobile app or a backend service, you have that full functionality. And the really cool thing we've built to that is that we've also added on an ability to add your own platform fee. So because swap is so important for any protocol, any UI, any dApp, we want that to be a revenue source that you can control, and so you can manage that fee and build any business logic that you want on it. If you integrate with Jupiter. So pretty excited about that. I think it's going to be awesome. We've got some great partners that have already built stuff that is just going nuts. I think it's going to be amazing as more and more people get on that.
Yeah, I already saw that. I think Mango integrated it, right? Mango Markets.
Yeah. Those guys are awesome builders. Their integration is just amazing. And they did it really, really quickly, actually. I think it might have taken less than a week, like maybe half a week or so. We love those guys, big fans. And then I guess sort of in the near future, the thing that we're pretty excited about is that everyone, and this is feedback from the community. I mean, a lot of the stuff we build really comes straight from the community and the feedback and the things that they're looking for. And a really exciting one that everyone has been asking for is trade splitting. So, you know, the ability to break a trade into smaller parts and then route them appropriately. And so it's something we started working on, and we may have a something soon to share on that. So
Yeah, that definitely sounds awesome. And it just overall building, I know, just to add in a little bit here, Teague, who is the general manager over at Solana, who you've been working with, he's just been drilling into me Jupiter. He's like, why are you still not using Jupiter yet? I remember the other day we were doing something. I was just sharing my screens, and like instinctively I went to Orca. And then he's like in the background there, he pulls up Jupiter and he's like, dude, look how much you're about to lose to slippage. Like, you're routing it the wrong way. And I'm like, okay, perfect. Yeah. So that's definitely something I've been using a lot more. And it's just great, right? Like, it gives you access to all of the dexes on Solana. So
yeah. I just to say that I'm a big fan of Orca too. I love their UI. They're great executors. They're great builders. But it's sort of a different thing, right? Like we're as an aggregator, we're just hyper focused on giving people the best trades, period.
Exactly.
And it doesn't matter where it comes from. And so we're totally in line with any trader. And we'll, you know, I'm not sure how many people really realize the magic of it, but when we say we aggregate all of the liquidity, is that, you know, like when we do our routing, I mean, it could be like a market on Orca and a market on Aldrin, right? Combined make the best route, right? And if you're just an Orca doesn't really, you know, look at anything outside of their own pools, same as like Serum or, you know, Radium or something like. So you know, you're not really getting, even if they're doing multi-hop routing, you know, they could be missing out, right? And we, you know, we're not biased in that way, and we're totally aligned. We're going to look at everybody, right? Which is also technically a hard problem too, because basically the more markets, the more tokens, the complexity to keep things very performant, so you can crawl all the liquidity just gets harder and harder. So it's something we have to continually invest in.
Definitely. And I'm going to cap you off there, Ben. We might have to have you on individually in the future, and that goes for everyone here, but we'll kind of jump over to yourself, Vlad. I know you guys have been doing some exciting things at Cronos, but I personally am just a massive fan of the D ETFs in general, just the concepts and being able to get blanket exposure to some of these things. I know even like the GameFi one is just exciting to be able to easily get exposure to that. What is the most exciting thing? What are you guys excited for coming up over at BiShares?
Yeah, I think we're just gonna. I mean, right now we're expanding onto the Cronos network, so we have some products that we're getting ready to launch in the next couple of weeks on Cronos, just to get our foothold there, I guess, just to establish a base, and then we'll go back to doing what we do best, which is, you know, creating more interesting ETFs for people to invest in and get exposure to multiple ecosystems. Because I mean, that's what we're really trying to do. Is every product that we come out with is trying to hit a sector. So rather than, you know, users trying to pick one token in a sector that's going to hopefully flourish, to just give them a basket of a bunch of the best ones in that sector, so they can invest in the entire sector in one go. So we're just going to keep pushing forward on that aspect of it, and just make sure that we're picking the right baskets that provide some good yield and are going forward in the space, rather, you know, what's the new innovative tokens coming out. And we're always looking for, you know, for what's next in each sector of the DeFi space. And that's kind of why we're trying to spread out. I know we're just talking cross chain and how we shouldn't spread out too thin, but that's one of the reasons why we are spreading out, because there's so many cool sectors. And like, just like yourself, you know, I'm excited about our products as well, of getting exposure to all these ecosystems. So that's pretty much what's next, is just more of the same, not just expanding the amount of offerings that we have. There's so many more offerings that we want to establish.
Definitely. And it sounds super exciting there, that you guys are just kind of plugging away and really in the groove now. We'll jump over to you, Chip. ApeSwap's always got something cooking up over there.
Yeah. Yeah, so like what Baby A had said earlier, a few weeks back, we encountered some serious issues with BSC throughput. It led to some major challenges with our subgraph, our data reporting. People can't execute trades. Their ape stats are wrong. They can't see what's in their farms, and so that was kind of like a huge wake up call for us because we really have to kind of harden our decks to where, like, if there's issues with the protocol, like we have redundancies to cover it, and the users aren't affected, impacted, and they think that their funds are disappeared just because the nodes aren't synced, or there's 5 different chain heads on BSC at any given moment. So yeah, what we really want to focus on here in the upcoming quarter is to really improve the user experience. We've brought on a few more front end devs, and we're fine tuning our back end, and we're working with them to get everything up to speed to make the decks stable for everybody who comes on. So there'll be UI improvements, other user experience improvements. We want to make all this documentation open source, the code open source, so we can get more eyes on it. And then, like what was mentioned before, with how we think that we can sustain liquidity, and that's through just building out like an entire DeFi ecosystem. And so, I mean, it's not anything, specific in terms of a development, but, between like Ola and Lyco, and you're talking about lending networks and fractional liquidity of NFTs, like these are the types of things that we want to further kind of strengthen in our ecosystem and make those bonds stronger, give our apes more opportunities beyond just yield farming and trading.
Definitely. And it sounds exciting to hear all of that coming up. And we'll jump over to you, Baby A, over at BabySwap.
Yeah, sure. Just like Chip said, the nodes were insanely congested. So basically all the data disappeared. And we also want to improve the user's experience. So just let me know your solution, and we could always discuss on it.
Yeah, absolutely.
Yeah.
Oh, what a challenge, right?
Right. So back to the question, we always see auto market making as the fundamental, and NFT as the connector, and also GameFi as the ultimate goal. So this is exactly why we upgraded our brand to Baby Metaverse in November. This is like building a crypto Lego, a DeFi Lego, where you gather the big pieces and the basement pieces first and build on top of it. We spend 6 months build the basics, which is the BabySwap part, the auto market making part. That's why we also first built the auto market making on June the 1st, and then we upgraded the brand, and then had our first game launched on December the 5th, called the Crypto U. And I think that's also a part of the reason why BSC was congested. Some upcoming developments will be Smart Router and Profile. Smart Router can upgrade users' trading experiences, and Profile is our next step to SocialFi, which is baby avatars. We have 10,000 different baby avatars for users to use in their community, also use in the games. And we will be focusing more on the game's new features and also the gamepad releasing, especially the Crypto U game features, including player versus player, new PvE combat, pads, mounts, team battles, merge, and etc. So yeah, that's basically our plan.
Yeah, that's awesome to hear. Before I let everyone head out, I know this is running a little bit longer than we expected, but there's actually a really good question here. And someone's asking about KYC in decentralized finance. Can we just I know this can open up a massive can of worms. Can we just do a quick little go around of what your initial thoughts are to this question here? And
Yeah,
we'll kick
it
off.
doesn't belong. There's no place for it.
There we go.
Yeah, that's that. I mean, it's trustless and permissionless environments. So where does KYC come into play?
Yeah, and it definitely depends. I will take a small counter on that and just argue a little bit, like basic US laws for most of trading in these sort of financial instruments require KYC. I don't know if just because it's a new sector, you hopscotch it, but from that same point of view, it's nothing new for a US citizen. So those are my 2 cents. I don't know if that's the direct answer, but that's just to play a little bit devil's advocate for you there, Chip. I don't know if anyone has a real quick comment before we head out here.
I'm with Chip. But that I think I agree. It's permissionless. Let's keep it that way. That's the spirit of it. I think that's why we all fell in love with it, and that's the way it should be.
Definitely. Cool.
Yeah, I agree.
Awesome.
I think as long as it's like separated from fiat, I think all is good because we are only like trading crypto to cryptos.
Yeah, definitely interesting to have that insight there. There you go, too, Bob. Hope that gives you a little bit of insight there. I guess the general consensus is the builders aren't too fond of it. So I guess that's the first step for you not to worry too much about it. Other than that, guys, thank you so much for joining me. I'm going to go ahead and boot all of you out of here and wrap it all up. But I appreciate all of you joining in today. This was actually one of the first roundtable discussions we've done here on DeFi Direct and YouTube. And I think it went amazing. So I just want to appreciate all of you guys for coming on and giving us insight on all these different chains.
Yeah,
Thanks so much, Greg.
Yeah, it's been great. Thanks for having us.
Yeah, it's awesome.
Yep. I'm sure we'll be speaking to you guys individually or on different bases, having you here on live streams sometime soon. And we're definitely going to be keeping an eye out, looking for your guys' latest developments. So again, thanks everyone for popping on. Peace out, guys. Awesome. So that was an amazing discussion there. We started with pretty high level discussion about why multi-chain is important, why it's not going away. And we quickly got into things about why certain chains are beneficial, things like having liquidity on ramps, seeing things like Binance, FTX, and crypto.com support some of these smart contract networks, even getting into things like why expansion may be a little bit difficult and tough. Other things, just jumping into how do you keep liquidity, one of the most fundamental things of DeFi. And overall, I don't want to get too far into this because, I mean, we just spent over an hour touching on all of this, and there's amazing discussions and thoughts that were put out. But it was amazing to have all of these different builders from all different ecosystems come in and give their perspective. We definitely are going to start doing a ton more of these and just content in general. I mean, I say this at the end of all live streams, but it's rang true since then. We're only ramping up our content from here. So for everyone who enjoyed this discussion, please go ahead and like the video. Also go ahead and subscribe because there will be a ton more. We're doing about 2 live streams per week. We're about to start a massive Traders to Gamers series where we're going to be playing a GameFi FPS on Solana. So definitely stay tuned for that. And overall, the content's just going to keep coming out. And the goal is to be one of the main stops for all Web3 and DeFi news. So without further ado, please go ahead and subscribe, like the video, and I will catch you guys next time.